So this is a very tight panel discussion. We have as Sylvain marked, we're between us and lunch. So we're trying to get as much in as possible. And a couple of things. One is that I think most of us have heard from Brock today, and we just heard from Sam. So I'm going to start with Richard and then Anthony to talk a little bit about your direct experiences with blockchain. And then Sam and Brock, if you can chime in afterwards with some of the challenges you're facing as well. So I'm going to start with Richard.
So Richard Crook, Royal Bank of Scotland. I head the emerging technology team. Run a small team looking at taking the shrink wrap off emerging technologies, one of which is distributed ledger technologies, blockchain being one of the family. Take us back to November 2014. We took the wholesale FX trading desk at Royal Bank of Scotland and backed it into the Ripple consensus network and turned ourselves into market makers in that space as a prototype or pilot, which taught us a lot about the immaturity of the market and how far it's got to go. But more importantly, as you can see today, you all hear a couple of years later, the opportunity that this technology provides. We roll forward through, as other speakers have pointed out, lots of prototypes, lots of pilots. And what we've learned from that is there's only so much fun you can have on your own with a blockchain. And therefore you need to collaborate. And therefore we brought together a number of people and have been building different products and pilots since then. You've just seen us break cover with R3 Mason, a regulatory reporting platform using the FCA and Santander as trials on that one. So it gives you an example of what we've been working on.
Thanks. Anthony?
I think one of the key things that Richard points out there, and I think hopefully the areas that we've both been successful in, is around that idea of learning. So I've spoken to peers at other banks where there hasn't been that iterative learning, and they've basically spent quite a lot of money, probably with third-party contractors, to build them stuff, and they've learnt nothing from it. And I think the reason why there's always this question of when will blockchain land? Well, blockchain has landed and continues to land. The thing is, it will be a gradual process over time. So it's kind of like asking the question, when did the internet land? Well, it didn't. It took a long time for it to land, and it continues to land now, and it'll be the same with this technology. And that's the kind of approach that we take. So Anthony Macy, head of blockchain R&D for Barclays, it's very much around trying to identify not only the opportunities, but the potential threats that will come further down the line to our business model. So we focus very much on the areas where we could probably improve a lot of inefficiencies. So we've done quite a bit of work in the trade finance space. We did a live customer transaction last year through the trade finance business. And the reason we were able to do that is because that iterative learning that came before that didn't happen overnight. And it will continue to be the case that we learn and progress and change. Project Mason work, I think, is fantastic, very, very interesting stuff, particularly because it kind of supplants a little bit of your work. So Thomson Reuters act as a second-party aggregator of data. In certain circumstances, maybe not all, but in certain circumstances, you no longer need that oracle because the banks become their own oracles. We can share data between ourselves and have certainty around that data, where it's come from, because we know the actors within the system. And that's kind of the basis that things like Mason work upon. It means that we can have much better things like reg reporting, but much better understanding of the state of various states of play. So things like intraday liquidity and reporting to central banks could be far, far more efficient by using these kinds of processes.
Is there, with both RBS and Barclays, banking systems, obviously there's a great deal of regulation that's involved with that. Are there some unique challenges that you're facing as opposed to more of the technology companies when you're trying to develop blockchain applications, as well as not only the regulations, but the legacy systems that banks are notorious for?
I think that's where the threat part that I was referring to comes in. So for those of you that are in finance in the room, you'll know that very heavily regulated. It's a very, very difficult environment to make changes and stay within that regulation. So any large company, I'm assuming not just financial companies, will have their no departments. And those no departments are our compliance functions and our fin crime departments and our risk functions. And they're there for the sole purpose of keeping us in business to make sure we don't do something which will systemically impact our overall business and put us in the firing lines of people like the regulators. However, at the same time, regulation will change. Where you see a lot of the so-called innovation is basically just circumvention of regulation. And it depends on how long that goes on for and how long that's accepted for before the regulators understand what that looks like and what they need to do about it, before it then starts to change the model. And I think a lot of it is around timing. So you'll see certain new business models being developed, which can then sit a little bit in the grey area when it comes to regulation. And as a result, they can propagate. And by the time regulators get a handle as to what it is they should be doing, they're almost too large to step back from where they've got to. And you've seen that with some of the sharing economy type products that are out there. And obviously, technology debt, that's always going to be an issue for any company that's older than 5 years, I would imagine.
Do you want to answer?
Yeah, so if we break it into two parts, the regulatory side is relatively simple. We're highly regulated. We're regulated for a reason. And what we're looking forward to is seeing those that are doing regulated practices come into the regulatory frameworks. And then it'll be a fair fight. What we've also got in that regulatory space are regulators who have only had two tools. They can ask for more data, or they can ask for it in a different way, in a different shape or format. Technically, that's called transport and protocol. Actually, they've now got a new tool or technology, state, and that's what distributed ledger gives them. So if you look under the covers of something like R3 Mason, what they've got there is now the ability to bring parties together that are regulated to actually come to consensus. So I'll trade with Barclays, Barclays will trade with me, and in actual fact, when we both report, the regulator stands like a man with two clocks. They don't know the time, because fun enough, through those legacy systems, they are getting a different answer from the pair of us, although it should add up. It's a zero-sum game. And that's one of the important things that the FCA spotted and have now discovered, and you're starting to see the regulators around the world starting to realize that actually this is a better way of regulating. That has a knock-on effect. You can reduce the costs. If you reduce the costs, you can pass that on to the customers. And that, for us, is from the regulation aspect, a good thing. That's where we're playing into that. I would probably hand the mic over from a social perspective. Everyone's done a prototype with Ripple. Everyone, it's part of the entry criteria of being inside the blockchain club. And from a Ripple perspective, you go and do that with some of the people inside the banks, where we're looking at 2-3 generations of employees who know nothing else but Swift. Mm-hmm. We put Swift in the late 60s, early 70s, and now it is so part of the fabric that they know nothing else about how to make a payment. And when you do a payment over Ripple, and you could use any other technologies, I'm not here to promote Ripple.
Thank you for doing that.
That's why I was going to pass the mic, don't worry. It's because you get this social problem, which is, all right, we've done this payment using Ripple. When are we going to send the message over Swift? Like, no, you don't have to. We've done it. We've made the payment. It's over Ripple. You've probably got some great stories of that social challenge of people trying to understand that there are different ways of doing things that we have done for 50, 100, 20 years. Doesn't matter.
Mm-hmm. Brock,
I guess in terms of challenges, the challenges of today are different than the challenges of yesterday, and these have been the challenges. I've been working full-time in the space since 2012. I started the first venture fund in 2013 that was set up to exclusively finance businesses in this space. So it provided me with a unique perspective, being kind of the main financier of innovation in this area. And Wave is probably the company in terms of trade finance, I assume, that you're referring to, yep. Which I led their seed round and their pre-seed and their seed, and these sorts of things. So thank you there too. And the challenges have been very different. The beginning was ultimately educating people because they'd been misinformed. They had a very inappropriate and inaccurate sort of perspective of the technology, beginning with things like reputation. The reputation of the industry was that this is used for drugs and bad things only, and that this is some nefarious tool for bad actors, which couldn't be further from the truth. That would be like saying the internet is a tool only for bad actors, or anything else is. These things are enabling technologies. They aren't good or bad. They can be used by anybody for whatever it is, for the most part, they want to do. but they're not inherently anything. The potential good that can come from this technology far exceeds the negative, but you had to go through the process of, on learning things, because most people got their information from the media, and they would get it from sensational headlines from people that didn't know what they were talking about. Saying that Bitcoin is anonymous, for example, which it's always been pseudo-anonymous. And unfortunately, the media misinformed a lot of the entrepreneurs that had bad intentions, and they're in jail because of it, because they thought it was anonymous, because some journalist that, again, didn't know what he was talking about said it was. And they didn't do their own diligence. So you've got different challenges that we've faced over time. The beginning of it being purely reputational. Then from once you get past reputational, some of the things that I did, for example, is I raised $100 million as a teenager, just under when in the 90s during the dot-com one, and I've been through many of these cycles. And as a result of that, my main investors historically had been Goldman Sachs and major financial institutions. And so I had lots of relationships with people at the incumbents. And I'd call up my friends and I'd be like, hey, I want to come in and talk to you about Bitcoin. Bill Gates is saying great things. Mark Andreessen is talking about it's going to change the world. Academia, I think it's about time you actually stop ignoring the technology and take a moment to learn what it is. And they're like, Brock, I love you. But in the context of my work, we will never, ever, ever, ever have a conversation about Bitcoin. It's off the table. I love you and I don't mean to have to talk to you like this, but it's just not an option. And I'd be like, what the hell are you talking about? I go, these people are saying X, Y, and Z. I'm not trying to sell you something. I said I'm going to come in and give you a free education for as long as you want to whomever it is in your organization you think should hear this. Are you saying that you don't want knowledge? Are you saying that you're not open to learning things? As a friend of mine? And I go, I'm not selling you anything. And normally that guilt would eventually lead to a meeting. And it eventually, and so these are 2013, 2014, a lot of the earliest conversations with the banks. And Wedbush, which was a Los Angeles bank, a friend of mine there, Cyrus, used to run a prop desk at Goldman, and he was running the whole secondary market stuff for Facebook shares and Twitter shares before they had gone public. And I said, hey, let's build a Bitcoin long fund, because I would keynote a lot of their conferences prior to that, not related to this sector, other industries I'd been in. And it eventually led to OK, because I knew Gary Wedbush and whatnot come in, and there's about a dozen people sitting in that meeting. And I'm assuming, hey, there's going to be approval, to do this and final confirmation. But they bring in the payments analyst, Gil Loria, and he sits across from me at the end of the table. And for the next hour, it's like no one else was in the room. He just grilled me over and over and over again, because he had such a misunderstanding of this technology and its potential. But by the end of that, at 1 hour, he's like, Brock, I'm convinced. Can I use everything that we've discussed today and print the first research report ever written on the subject? I said, absolutely, whatever you want. And so that was Wedbush's first report. Goldman Sachs and Morgan Stanley's reports came shortly thereafter, which essentially were the same comments all over again, and that was the beginning of research in the space that made it okay to then have a conversation. You needed that early validation. And then I moved on to the next challenges, which was then in going in and having those meetings. And now all of a sudden, all right, we're willing to have a conversation, but still pretty reticent and kind of uncomfortable with it. What should we do? And those conversations were normally, okay, Brock, we want to have the conversation. Is this good or bad for our business? And I said, it's both. I said, it's going to negatively impact some aspects of your business, and it's going to benefit some aspects. And the analogy that you should probably pay closest attention to is this voice over IP. When VoIP came along, everybody said, oh, this is going to be the end of the telecom industry, kind of like, oh, Bitcoin's going to be the end of banking. I'm like, that's not the truth. I mean, that's certainly not an issue that you need to concern yourself with in the near term. Long term, who knows what's going to happen. Let's talk about things that we actually have some influence over. I said, you do a SWOT analysis on every aspect of your business and figure out what to do. And what you're going to have a challenge with ultimately is the innovator's dilemma. And in the same way that everyone said VoIP would be, damage those businesses, the biggest beneficiaries of voice over IP was the telecom industry. They co-opted the technology, re-architected their middle and back offices, and became the biggest beneficiaries of it when we went from making our phone calls over twisted copper wires to VoIP. And we, the consumers, were none the wiser. Margins just got a hell of a lot better. I said, I think that's your opportunity. And what will determine, bank, if you're the successful one at this or the one that goes out of business, is the order in which you choose to go. Are you going to be first or last? And I'm not saying you want to be first. You may want to be last, because I might be completely wrong. But But these are the things that you need to decide as an organization, and eventually that led, and Alison Davis from Royal Bank of Scotland chaired my advisory board, and I've done all that stuff. I've educated the Fed in a lot of these types of meetings over the years. So fast forward past that, another 100 challenges. The challenge that I'm facing today, the one that keeps me awake at night more than anything else, well, China not anymore, thank you, is that this is a technology that I believe we're past the point of no return. I believe this technology, you can't stop innovation. You can't put the cat back in the bag. You can't uninvent things once it's happened. And we've gotten to a point that this technology is about to change the world, whether we like it or not. But technology is neither good or bad. It doesn't have a conscience, like a lot of things. It's ultimately what we do with it that will determine the outcome. And my biggest concern is about humanity in the long term. And is this technology going to be something that enables the betterment of humanity, or something that negatively impacts all of us? And that's going to be determined by the quality of the people that do it and the place that we operate from. Are we people that never compromise our integrity? That's my challenge, is convincing these entrepreneurs in a time where money is being made so rapidly and at rates, and where there's an asymmetry of information that is so great between those that know and the new people that want some of that action, that people are going to be ripped off, and all sorts of bad things are going to happen, just like in the internet in 97, 98, 99. These things are unavoidable, but try to educate people as best you possibly can. But the concern is that trying to get people to operate from a place of meaning, purpose, and intention, and to never compromise their integrity, because I think the future of humanity depends on it, and that's the challenge I'm trying to solve.
Okay. And to follow Sam,
Right.
to the challenge of humanity.
So I think I mentioned several of the challenges that we'd faced, but if I look more broadly just in participating in the various consortia that we do. So we're members of R3, of Enterprise Ethereum Alliance, of Hyperledger, several other more private ones. It's been that people don't really understand how this is going to change the way in which business dynamics work. I often get people come to me, including members of my own company. I want to start a blockchain, and I want to run it, and I want to own it, and everybody is going to be beholden to my rules when they use that, and it just doesn't really work like that at all. But on the flip side of that is it opens up the box to start thinking about what are the governance rules that are required for running something successfully. And I have seen already several mini consortia where they get stuck when it comes to governance. Who is going to have the rights to do various things, to suggest software upgrades? Who's going to enforce those software upgrades? Who's going to make decisions over who has voting rights? How many voting rights? Who should be allowed in? Who should be kicked out? All of those pieces are kind of not handled when you do a prototype. And yet they come from a prototype and they want to make a real world application out of it. And everybody who participated thought that they were the ones responsible for that, or that they wanted nothing to do with it. So the piece around governance of shared economies with multiple participants needs a heck of a lot of work, particularly if you're looking at enterprise applications, which I know is the theme for this stream, right? So yeah, you can do it for Bitcoin and say, you know what, our governance is all in, go for it. But potentially for what you want to do for your application, that is absolutely the wrong approach.
Well, just to kind of follow up on that, I think governance is one of those things that's easily overlooked and quickly dismissed. It's not the case. I mean, we've heard from some of companies today that are looking to try and build in governance as part of the overall platform. The issue that you start to get with that is kind of, to your point, Brock, around trying to do this from an altruistic standpoint, because it's all very well having a voting mechanism, but if that voting mechanism isn't evenly distributed across your users, which is very, very difficult to maintain from a governance standpoint, you end up with, again, a centralized control architecture where the needs of the few outweigh the needs of the many, because they're the ones with all of the voting rights, they're the ones with all of the power. And you can kind of see that happening with the Bitcoin governance. So people talk about Bitcoin being very decentralized and being very permissionless, and there's no centralized control, which there kind of isn't, but at the same time, there kind of is. So there are very, very few people who actually contribute code to the Bitcoin code base. I would consider that to be a form of centralization. There are very, very few entities across the world who actually mine and process Bitcoin transactions. That's part of the reason why there's been this kind of almost a civil war in Bitcoin around which direction they move in, and as a result, Bitcoin has split. So some of you may be aware it's now split from Bitcoin Classic and Bitcoin Cash. So they're two sides of the same coin, effectively. No pun intended, kind of intended. But it's all around this governance, because there's no defined governance. And I think it's because of this idea of how the open source world works. And open source is great, but it's not free. And we kind of think it is. We've kind of got into this habit of thinking just because something's open source, it's free to use and free to maintain. And we were kind of given a bit of a shell shock by this with Heartbleed a little while ago. So Heartbleed was this vulnerability that was found to pretty much impact everything. But it was based on open source software. Well, who fixes it? Well, no one fixes it because it's open source software. You know, it's people who kind of do this in their spare time. That there is no allocated fund to say, let's go pay these people to go fix it. And what happened was some of the large tech companies got together and said, we'd better fix this because it's a problem for all of us. And then a patch was released, and then slowly that patch was distributed around. When you have these kind of autonomous agents acting in a very, very decentralized way with no coherent direction to head in, governance becomes absolutely key, because as soon as something goes wrong, you need someone to fix it. And if people don't move fast enough to fix it, then it causes a great deal of problems.
So if you take that a little bit step forward, you know, we're talking to the risk officers in Royal Bank of Scotland around digital currencies as to, you know, what is our position on that. It's relatively simple. It's to avoid digital currencies where the majority is owned by the few. It's not a good construct for making a financial system. So if you look at something like Bitcoin, which is a great experiment and has given us a real-world application of blockchain technology, distributed ledger, the majority of that is owned by a very small number of people, a small number of accounts. The majority of the physical network is in one regulated country, China. And when they jump, or when they shout, they all have to jump. And that's what we've just seen this week. You've got a very small number of developers who are working on that Bitcoin, and that's why you're then seeing the philosophical shift. So although Bitcoin is one of the best examples of a distributed autonomous organization, actually it's also one of the poorest examples of governance of an open source software project.
Well, that's also because it was first, you know.
It's not first as an open source project.
Well, but I'm saying first of its kind in terms of a blockchain solving Byzantine generals' problems. No one on earth had ever solved it until Bitcoin. Bitcoin is a proof of concept.
It is an experiment. And
It's a proof of concept.
And if you take that, and as you go through that process and you look at it, actually there's an underlying challenge that Sam's picking up on, which is you don't want to replace one centralized business model with yet another one. If you're going to distribute this with the technology, you've got to distribute the business model too. And that leads you to recognize that every time we do one of these pilots or prototypes, one of these proof of concepts, actually we've got to understand how we break apart the governance and put the business model back together in a distributed fashion. Bitcoin solves that by providing fees at the node level in terms of transactions. But you know, look at some of the projects I've followed up and led in Ireland, where we brought the 5 Irish banks together to create a settlement or a distributed clearing settlement system. That then came to the conclusion that actually, if we just stand up a small legal entity, we can solve all of those governance challenges, and we can just run it like that. As soon as you've done that, why are you using a distributed technology? You could use a database. Now that's got a good technology to use, and because it's 40 years old, and we know a lot about it. So if you can solve the problem with a database, solve it with a database. And that I get a lot of people coming to me in the bank saying, oh, we want to build a blockchain. Mm-hmm. But the answer actually is, for most of the problems we've seen, definitely internally, actually, you don't need a blockchain, you need a database. And that's where the biggest challenge we've got right now is how do we decentralize the business model that we're looking at.
A decentralized business model.
Yeah, stop throwing blockchains at everything because it's a buzzword.
Yeah. Although it does get you funding.
Especially lately.
Yes. And unfortunately with that, we have to conclude our panel. We knew the time was going to go very quickly. I assume all you gentlemen will be here for lunch. so that if you have questions, please do take the time to come up to each of them and ask. So a big round of applause to our panelists now.